Hey, this is Warren Redlick. Let's talk about Tesla, vehicle deliveries, revenues, profit, and share price in 2021 and 2022. I put together some clips from a recent live stream I did looking at the delivery numbers and a conversation with James Stevenson on a video a little while ago. Put that all together to show you where things are going this year and next year. Are you ready? Let's go. Here's what I'm excited about. What I'm excited about is Tesla deliveries, and I came up with a spreadsheet. The top of the spreadsheet is 2021, the bottom of the spreadsheet is 2022, and the middle is a little bit of explanation. So the first row is real. The first row is what happened in the first quarter of 2021, that Tesla's deliveries were 184,877 vehicles. Auto revenue was $9 billion, $9.002 billion. That works out to an average selling price of $48,000. Auto revenue here, $9 billion, divided by 184,877 deliveries, gets you about $49,000 average selling price. Quarter one was almost all Model 3 and Model S. There were a few, I think, Model S's or Model X's that had been left in inventory from Q4 that still sold, but it was almost entirely Model 3s and Model Ys. Quarter two, we currently have a delivery estimate of 201,250 vehicles. My theory, for lack of a better term, is that average selling price is going to be higher. And I think I did a calculation here because there were about 1,800 or 1,900 Model S's. They're plaid Model S's, I think all of them that were delivered. That's an average selling price of like $140,000. So that increases the average selling price of the vehicles sold by a little. It's a small chunk of the total vehicles, right? But it increases it a little. And I think we've seen price increases due to all kinds of reasons. Tesla has raised prices a little bit. That bumps auto revenue up over $10 billion for the quarter. That's the first time that automotive revenue would exceed $10 billion for a quarter. Big news. All right, moving ahead. These are projections now. These are total. I mean, I have reasons for these numbers, but I'm predicting 236,000 vehicles delivered in Q3 and 280,000 in Q4. Let's talk about Q3. We had 201,000 deliveries. We had 206,000 produced. There's about 5,000 vehicles remaining in inventory for Q2 that held over that are going to be delivered in Q3. Ballpark, what we're seeing is a roughly 10% increase in Model 3 and Model Y from Q1 to Q2. I think we're going to see that again. So that's an extra roughly 20,000 vehicles. So you go from 201 to 221. Model S and Model X is going to increase a lot more than that. It's going to go from less than 2,000. I think maybe 12,000 vehicles in the quarter. Maybe it's 10,000, so I may be a little high there. And then you got the 5,000 in inventory. You add that all together, you get 236,000 vehicles delivered. Now, something else good might happen, something bad might happen. I think we're in the 230 to 240 range, but this is an estimate. I think the ASP, the average selling price, is going to go up more because it's going to be a much larger share of Model S and Model X in Q3. Which is going to, their average selling price is probably over $100,000. You're going to see some long-range Model S's bringing down the average selling price of S and X, but you're also going to see some X's maybe delivered in the third quarter, which is going to help different numbers. A lot of things come together. Maybe a lot of S's and X's get FSD. I'm not sure about that. So I think we're going to see that bringing up average selling price, and I think we're going to continue to see increases in prices because cost of materials, a lot of things are going up in price. That affects profit, by the way. The cost of goods sold is also going to go up. So this doesn't necessarily mean big numbers. At this point, I just want to mention that you're going to hear from James Stevenson a little later. Cost of goods sold might actually be lower going forward, and he's going to explain why. I just said I think it's going to go up. He's got a pretty good explanation why it's going to go down. So be ready for that. It's coming soon. I'm saying average selling price of $52,500, and we see Q3 auto revenue, again, this is auto revenue, not total revenue. Q3 auto revenue jumps over $12 billion. And that's, I don't think this is crazy. I don't think it's crazy to see the sales go up this much. And this is assuming there's no Berlin or Texas deliveries in Q3. I calculated my Q3 number, 10% increase in Model 3, Model Y, a 10,000 vehicle increase in Model S and Model X. I think that's optimistic. I think that's the weak point. If we're going to have a weak point in these numbers, I think my 10,000 increase, which would mean 12,000 roughly vehicles delivered in Q3 of Model S and Model X, that might be a bit optimistic. Maybe it's 5 to 8 is more likely. And then there were 5,000 in inventory. Those are going to be sold. And when you watch deliveries, when you watch a graph of Tesla's vehicle sale, production, and deliveries, they run together, and sometimes production's higher and sometimes deliveries is higher. This last quarter, deliveries were lower than production, so next quarter delivery should be higher than production. I could be wrong, but I think that's about right. So you end up with 236,000 based on this calculation. Now you go to Q4. I think Fremont and Shanghai continue incremental growth. That's a roughly 10% increase in production from Fremont and Shanghai. And that gets you to 260,000. You add 24,000 to 236,000, you get 260,000. I'm right on that. And then Berlin and Austin begin to contribute. And you get another 20,000 from Berlin and Austin, 10,000 each, something like these. Again, these are guesses. You get 280,000 delivered in Q4, and you get 902,000 vehicles, just over 900,000 delivered in 2021. I think this is a little bit optimistic, and 860, somewhere between 860 and 900 is probably a little more likely, but I think this is possible. You can see my average selling prices. Average selling price in Q4 goes up to 54,000. The share of Model S and X go up. One of my theories is that the Berlin and Texas Model Ys will be high-end vehicles at first. Those are going to be the most expensive Model Ys sold. So that's going to bump up the average selling prices. You're going to have an extra 20,000 Model Ys coming out that are $70,000 vehicles because they're so awesome. Again, overly optimistic maybe, but that would push quarterly revenue, auto revenue, over 15 billion. That's a pretty good number. Again, take my numbers with a grain of salt. And for the year, you get a total automotive revenue of $46 billion. You get an average selling price for the year as a whole of $52,000. That's a good ballpark number. This $46.7 billion in revenue for 2021 is auto revenue only. You're probably going to add another $6 billion in other revenue. It's about 15% of revenue comes from other stuff. Or I should say, other revenue is about 15% of auto revenue. So maybe you're at 52, 53 billion total for the year, which is up from about 31 billion in 2020. Pretty good growth. Okay, now we're going to dive into James Stevenson going through his profit numbers for 2021. He surprised me with his numbers, especially for the third and fourth quarter of 2021. Really big jumps in profit for Tesla. Listen to his explanation of why. It's going to take a little bit. It's really worth listening to. So in this tweet, you've got 2020 and 2021. I've got the second two quarters of 2020 and 2021. The last two quarters of 2020 and the 4 quarters of 2021. For those who are watching, the grade section is James' projections for what's going to happen in 2021. The white section is what has happened. And I've got red boxes around adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization.
Yes.
And then I've got blue boxes around GAAP net income or earnings. For those who are looking on the left side, you can see quarters 3, 4, and quarter 1. Tesla had adjusted EBITDA, which is a form of income. It's the income that's used to determine Elon's stock compensation. That has been consistently around $1.8 billion for the last 3 quarters. And James, going forward into 2021, shows those numbers going up dramatically. So before the red box, you see nearly $3 billion in EBITDA, then 3.6 billion, then 4.3 billion. GAAP net income in the fourth quarter shoots up really dramatically to basically, I think that's $4 billion, if I'm not mistaken. I don't think it's
$399. That is $4 billion. Yeah.
I'm a little surprised about this projection so soon, reaching basically $4 billion in profit in quarter 4.
If I were looking at this forecast unaware of what's in it, I would also question it and say, hey, that looks wrong. How can the adjusted EBITDA in Q4 be only 0.7 billion higher, while the GAAP net income at the bottom line has somehow gone more than $2 billion higher from Q3 to Q4? That doesn't look right.
Right.
And the answer is found right below the red box in Q4. The parentheses there around the 0.128 indicates that's a negative number. Now, how on earth can your interest, taxes, depreciation, and amortization in total be a negative number? Well, under normal circumstances, it wouldn't be able to. And I certainly am not projecting that from Q4 onwards, that'll be sustainable and ongoing. That is a one-time favorability. So what happens when you lose money as a business is that you don't have to pay US federal income tax because you did not make a profit. So when companies lose money, the IRS does those companies a solid and says, hey, tell you what, next year, if you're profitable, you don't have to pay taxes on the whole thing. You can, like rollover minutes on a cell phone plan, you can accumulate the deficit or the losses that your company has had to date and save those up to whatever future year your company becomes profitable, and then apply those losses against your profits to reduce your taxable income. You're allowed to claim 80% of the amount of accumulated losses to date. They don't tell you when they're going to exercise their get out of jail free card. You're allowed to reduce your taxable income, and you can claim 80% of that amount in the first year and the other 20% in the next year. And there's no reason you would not claim up to the maximum of 80%. You would take it if the IRS gives it to you. So $1.6 billion hits on the tax expense line of the income statement in Q4, but that'll be a one-time deal and non-recurring, and the Wall Street analysts will back it out. So if you don't like the $4 billion in Q4, subtract 1.6 billion from that, and you'll get 2.4 billion, and that's what I'm forecasting for the earnings after that deferred tax asset claim is netted out.
How does Q3 double EBITDA against Q1? But I'm still stuck on how you get to 4.3 billion in EBITDA in Q4.
Yeah, well,
up from we've been doing 1.8 billion in EBITDA for 3 quarters in a row, and all of a sudden we're jumping up to a new level starting in Q2. What's happening that allows Tesla to jump its EBITDA, which I agree with you is a more understandable profit line than GAAP net income? What allows Tesla to jump that profit level up?
Well, there's a lot working in Tesla's favor. So if you want to break down the cause of change on it, the volume is favorable. So Tesla is selling more vehicles than they ever have before. So record high vehicle delivery numbers for the automotive segment. Also, the mix is changing of those vehicles. So more of the vehicles are being produced in the China Shanghai Gigafactory now than ever before, and that trend is going to continue into the future. It's less expensive to make vehicles in China than it is in California by a lot. It's not close. The labor costs in California, especially in the Bay Area, are very high. And the cost of expediting stuff to San Francisco is very high. Not a whole lot of parts for vehicles are made in San Francisco, California. You have to ship them in from all over the world, right? In China, there's a lot of local sourcing. China is very good at making stuff. And so Tesla has done a really good job of increasing the amount of locally sourced parts that go into those vehicles. That drives down the cost substantially. So you have that, you have rate, you have increasing take rate over time on things like full self-driving options. As more features roll out and more people see how cool full self-driving is, more of them are going to buy it, right? So that take rate increases the revenue per vehicle, and it comes with almost no variable cost. When you sell somebody a car that has full self-driving software versus a car that doesn't, it doesn't cost you any more at all. So you're just getting $10,000 more worth of profit every time that happens. So the more often that happens, the more profitable the company gets.
We're going to see significant increase in sales of Model S and Model X, especially as we go forward. That's going to drive up the average selling price. It seems like Tesla is at least slowly increasing prices of Model Y and Model 3, Model Y in particular. And then just with forgetting about FSD for a second. And then my gut is that the vehicles that come out of Giga Berlin and Giga Texas in Q4 will be priced high as well. That the first Model Ys coming out of Giga Berlin and Giga Texas will be premium models.
It makes sense when you first start ramping to make the vehicles people want to pay the most for first. When you're at low volume, you haven't reached your economies of scale yet. So if you want the factory to get profitable faster, you make the highest optioned vehicles first. But yeah, you hit on one a little from Q1 to Q2. Back in Q1, a lot of people were buying standard range Model Ys. Tesla took that off the menu. You can't get standard range Model Y anymore. That change sounds minor, but it has a huge impact on profitability because the standard range Model Y was like a $45,000 vehicle or something, and the long range is well into the 50s.
Key detail here is that Tesla's profit is going to go up disproportionate to its increase in revenue. Revenue's going up, profits going up faster. When Tesla makes vehicles in China and sources raw materials and supplies in China and uses Chinese labor, it costs less to make vehicles in China. And when it ships them to Chinese customers, that saves shipping costs. Where Tesla is heading in the next year, this year and into next year, is vehicles in Europe will be made at Giga Berlin with materials sourced and supplies sourced from Europe, and they will be sold in Europe. So the profitability of making the vehicles goes up. Also, the cost of making the vehicles goes down because they're coming up with more efficient manufacturing methods for Giga Berlin and Giga Texas. Same thing in Texas. They're going to make vehicles locally. Those vehicles are now going to be closer to the East Coast of the United States and more of Tesla's customers in the United States. So that becomes more efficient. So that increases profitability. Fremont, same thing. Fremont no longer exports vehicles. Shanghai no longer exports vehicles to Europe. So they've massively reduced their cost of delivering products to customers while they're reducing the cost of making the products. And all of this comes together, and they're able to deliver the products to customers more quickly, which means the time between when they pay for the supplies and materials and cost of building the thing and the time they actually sell it and get the money for it, that shrinks as well. All of this means Tesla's profit goes up and up and up. And we are not far from a time when Tesla is making $5 billion a quarter in profit. Not 2021, but at some point in 2022, this is starting to look likely. And when Tesla has annual profits, this is GAAP earnings we're talking about. This is the thing that everything else is based on when you look at stock valuations. If GAAP earnings hit $20 billion a year, which they should be on a pace for that by the fourth quarter of 2022, if not sooner. If you're talking about $20 billion a year in profits, earnings, and then you figure price earnings ratio of 60, you're already at $1,200 a share. And I would say the price earnings ratio for a company growing this fast, we're looking at more like a price earnings ratio of 100, and you're looking at $2,000 a share. I still think that's low. I think Tesla's value is higher than that. I think the markets are underestimating how fast Tesla is going to grow. But this point that James Stevenson makes about the increasing profitability, Elon has talked about, all this makes a lot of sense. Not that one shot bit that they get in the fourth quarter of 2021. That doesn't matter for long-term valuation, long-term profitability. That's just a nice little boost that gives Tesla more money they can spend investing on factories or whatever. But this, you put this together and you see where they're on a path to $20 billion a year in profit, annual profit, which leads to a share price of $2,000 a share. And that's in the short term. And that doesn't include if they get a boost from increasing take rate on FSD, full self-driving. It doesn't include if they get some other kind of boost. It doesn't include if the robo-taxi network starts up and starts making ridiculous profits. All of those things really push it through the roof. So that's where we're going. That's why what James Stevenson said matters. And now let's take that into 2022. Next year is going to be the big one. Next year is going to be the big jump. 2021 is the big jump. So what happens is in 2021, Giga Berlin and Giga Texas start pumping out vehicles. They start adding, and you can see, all right, they start ramping in Q1, and they add, and you know, Shanghai still has a little bit of growth left in it. There may be still a little bit of growth in Fremont, but really the bulk of this is going to be that Shanghai Giga and Berlin Giga start ramping. So if they pump out 80,000 vehicles between the two of them in Q1, that'd be 320,000 for the year. That's way less than what those factories are ultimately going to be capable of. And it's really, when you get out, I'm just adding 100,000 a quarter. This is a total hack estimate. I'm not saying this is an intelligent, thoughtful estimate. 350, 450, 550, 650. The average is 500 for the quarters, and you get 2 million vehicles in 2022. There's a background for why I think they hit 2 million vehicles in 2022. If you follow this channel, you know where I'm coming from. At Q1 investor call, Drew Baglino said that Tesla expected to get more than double the battery cells in kilowatt hours, gigawatt hours, whatever, from suppliers than they're going to get in 2021.
Our request to our strategic partners for cell supply is please supply us with as much as you possibly can.
Yeah, and specific to that, we're on track to more than double the supplier capacity over the next 13.
More than double. And that doesn't include the 4680 cells that Tesla is going to produce. So if Tesla's going to produce 900,000 vehicles or even 860,000 vehicles in 2021, and you double that, you're at about 1.8 million vehicles in 2022. And then you go more than double, and then you add 4680 cell production. It's really hard not to get to 2 million vehicles in 2022 if you're using the batteries. Some of the batteries are going to go to something else. The CATL lithium iron phosphate batteries may be significantly increased megapack, which is its own boost to Tesla's numbers, by the way. That megapack is a high-priced item. That's a big revenue source if they do increase megapack. If you're going to more than double sales from suppliers in 2022 compared to 2021, it's hard. And then you're going to add 4680. It's hard not to get to 2 million vehicles in 2022. I don't see... You really have to find some way of screwing things up to not get to 2 million vehicles in 2022. Then the rest of it, I've got average selling price dropping to 52,000 in Q1 from my 54,000 before. I've got average selling price dropping to 50,000 in the final two quarters, and the overall average selling price is below 51,000. I think this is pessimistic. I think that we're going to see S and X fully ramped, so that's going to be a significant increase. If I'm correct about Model Ys, that Model Y is going to have an ultra premium value because it's going to be an amazing vehicle. That should pump up values. But at the same time, if they really, really increase supply, at some point, maybe they hit that point where there's not enough demand and they have to lower prices to attract buyers. And, you also have this inflationary stuff going on in the economy. These numbers are total, I'm winging it, right? But, to call it $50,000 and you end up with 2 million vehicles at a roughly $50,000 average selling price, you end up with $101 billion in automotive revenue for the year. Again, you're going to add a ballpark of 15% on top of that. You get to about 116 billion, right? We're here now. We're just starting Q3. Somewhere in the next 6 quarters, what if FSD actually delivers? And what does that do to revenue? How much does that increase the take rate? What happens with subscriptions for FSD, and what does that do? If they actually deliver working FSD, and this is not even robotaxi, this is assuming there's no robotaxi revenue in 2022. If any of that stuff comes in, you're way over 120 billion in revenue, which means you've more than 4x'd in 2 years. And this is the case. This is when you hear the Gary Blacks of the world, when you hear the Wall Streeters talking about Tesla's, growth story, they mostly don't see it. Very few people on Wall Street see how big this curve is going to go up. I mean, it could be 1.9 million, it could be 1.8 million, but I think these numbers are pretty reasonable. We are seeing spectacular growth for Tesla. I want to focus in on this particular quarter, this $32 billion revenue quarter in Q4, and recognize profitability for Q4 of 2022 is going to be higher than profitability of Q4 for 2021 as a percentage, because more of the production is local, sourced local, and delivered local. So that makes it more profitable. And you've got Berlin and Texas are producing more efficiently than Fremont. Shanghai has scaled a little bit more. All the newer factories are producing more efficiently than Fremont. You just end up with, on top of that, Q4 $32 billion is basically double the $15 billion of revenue of Q4 of 2021. It's actually more than double. And on top of that, the profitability is even higher. So if we're looking at about $2.6 billion in GAAP net earnings for Q4 of 2021, we should be looking at like $6 billion in GAAP earnings for Q4 of 2022. And that means we're on a pace for $25 billion in annual profit, maybe more than that, $25 billion in GAAP earnings. Now you're pushing the share price to $2,500 a share. As GAAP net earnings rise that high and you take a price earnings ratio of 100 to it because the company's growing that fast, that it merits a price earnings ratio of 100. And now you can see where it's going. And then you add in that possibility, well, what if FSD hits? What if some other profitability factor hits that jumps things even more? All of this together, you can see where just looking to next year, looking to the end of this year and looking into next year, you don't have to look at 2026. You don't have to look at 2030. Looking not that far ahead, you can see that Tesla's profitability is jumping, and that translates to a jump in share price. This is all coming soon. We will see by the end of this year, and I should note, James' prediction for deliveries was off for Q2. He estimated 217,000, ended up being 201,000. It's a little unfair because there were some vehicles produced that weren't delivered that will be produced the next quarter. But his profitability point is very, very sound. And I'm using different numbers. I only have 201,000 deliveries in this model that you see here. There's a question about how fast they grow, but it's really hard to see how they don't grow that fast and get to where we're going. We will see by the end of 2021 what are the numbers. We will see what auto revenues very soon, within a couple of weeks, we will see the auto revenue for Q2 of 2021. So I'm saying $10.2 billion in automotive revenue for Q2 2022. We'll see how close I am. We know what the delivery number is. We have a pretty good idea of what the average sale price is, but we'll see. If this $10.2 billion number in Q2 ends up being low and it ends up being, say, $10.5 billion, that's a really promising sign. As long as it's close to $10 billion, it's a good sign. I think we're going to see over $10 billion in auto revenue for Q2 2021. And we're going to know the answer to that soon enough. So there's a test for is Warren right or is Warren wrong? This is where we're going. This is positive stuff. So you can see where right now we're at $650 a share last time I checked, something like that. You can see where we're looking at $2,500 a share in a year and a half. It's crazy. And I think that number's low. So let's get excited. Let's stay excited. Let's be positive. Tesla's doing great. We're seeing great things. Please check out my other videos. Support this channel on Patreon. Check out the t-shirt at elonbits.com. Elon Be Less Wrong. Machine that builds the machine. Tesla is the next Tesla. A lot of great shirts. Really appreciate your support. And thank you to the Vasa Law Firm in Sweden.